roughly 2 years ago, when Expedia Group's then CEO, Dara Khosrowshahi, left to go run Uber, many investors decided it was time for them to leave, too. The company had a couple of tough quarters. After his departure, the stock got clobbered, falling from more than $150 down to less than $100 in February of last year. But since then, the online travel play has been gradually working its way higher once again. When Expedia Group reported its latest quarter at the end of July, they knocked it out of the park and the stock caught fire. Then the whole market rolled over, and while Expedia rebounded over the last few days, it's still more than a few points off its 52-week highs. So should we view this as a terrific buying opportunity in a stock that is clearly trending higher? Let's check in with Mark Okerstrom. He's the president and CEO of Expedia Group, who took over from Dara 2 years ago to get a better sense of how things are going and how things are turning. Mr. Okerstrom, welcome to Mad Money. Good to see you, sir. Thank you so much, Mark. Thank you.
Happy to be here.
Oh, great. Now, everyone knows Expedia, but it's really Expedia Group.
Right.
And I want people to understand that they may think it's one company, but you've got a bunch of good companies.
We got a ton of great companies. I think most of the leading brands, not all, but most of the leading brands in travel, whether it's Vrbo in the alternative accommodation space, Expedia, Hotels.com, Travelocity, Orbitz, Cheap Tickets, Trivago, you name it, we've got a host of incredible brands.
Well, let me ask you why. Why not just brand everything Expedia, which is such a good brand and everybody knows it?
Well, the fact of the matter is that consumers love to have choice, and consumers have developed relationships with each of these beloved brands over the years. And what we've done is essentially brought them under one family, allowed them to share a lot of the great technological advantages that we've got, allow them to access all of our great inventory, including great lodging inventory, air, car, hotel, et cetera. And it gives us the scale advantages that we might have if we were one brand, but we're able to spread it across all these brands that have loyal customer following.
I wonder at our end, at the DeBarry, you're kind of our wholesaler, so to speak. You handle all our bookings. Do people understand that you actually are the backbone of a lot of corporate bookings? That if you're going to be able to get, say, Merck's business or Celgene's business, you have to be affiliated with Expedia.
Yeah, absolutely. We've got a big part of our business and a growing part of our business is powering other players out there. We power a lot of the big traditional corporate travel players that might service that. We've also got an incredible business called Agencia, which is about the fourth largest corporate travel agency in the world that also allows us to go into big corporates and service their travel management business.
Now, we were huge fans of HomeAway, and we were because I love the product, and I always felt it was undervalued. You guys obviously did too, but you branded it new.
Yes.
And is that something that people have have a hard time to find? Because I know that, at one point you weren't that happy with how it's going, but you really kind of turned it around.
Yeah, so we recently rebranded the whole thing to Vrbo. And the reason why we did it was that the original brand that was the essence of HomeAway was VRBO, Vacation Rentals by Owner.
Right.
A very authentic brand. And as we thought about our international expansion plans, which are kind of the next phase of growth, we said, listen, let's pick a great brand that we can really back. It's Vrbo. We had a little bit of hiccups as we transitioned to the Vrbo brand, but we're optimistic that over the long term, it's going to continue to be a great growth brand into the future.
Now, we always looked, when I was talking to the guys that I like very much at HomeAway, that there was this great disparity between the unicorn of Airbnb and HomeAway, now Vrbo. I mean, are these, when you see something like an Uber, or when you see something like a WeWork, do you think that people are now getting a little religion that when you're a public company, maybe you're cheaper than the private company, so to speak?
Well, listen, we've always strived to have a track record of delivering strong, healthy top-line growth and healthy profit growth. We think that's good business. And, as we look at a lot of these companies that have gone public recently, nice top-line growth, a little bit shy on the profitability. And listen, I think at some point investors, what do they want? They want to see that cash flow flowing. And we built a great company that produces great free cash flow, and we're pretty proud of it.
In one of the conference calls, it was really terrific. You talked about how people see the planes full, and people know that the hotels are full. So therefore, are we doing well? Yes. I think those are signs also that the consumer's going places.
Yeah, listen, I think consumer confidence still remains pretty high. You've got this secular shift from things to experiences that is buoying between travel. From what we can see, if you look on a global basis, I mean, travel is just going to continue to go up, up, and up, and we're absolutely thrilled to be at the center of it all.
It is the essence of what happens when you go from a lower wealth to a middle wealth, right? That's when you go on a plane.
Absolutely. What do people do when they get a little bit extra money in their pocket? They say, listen, let's go and explore the world. I did when I was growing up. I'm sure you did too.
Oh, no, absolutely. So when we read these stories, downbeat stories about tariffs, and yesterday I know that Chief Powell is struggling because he doesn't want to cut rates. It feels like that because he knows the consumer's doing well. I mean, if he looks at Expedia, should he be thinking that the consumer's doing well, or should he be thinking that Expedia's got inflation under control because of the bargains they offer?
Well, I think you look at that and say Expedia is doing well. I mean, you continue to see good strength in average daily rates and average ticket prices. Yeah. We continue to see spending up. Room nights are growing. Gross bookings are up. It seems very healthy to us, and I think that's certainly been the trend year to date.
Yeah, I mean, I look at your company and I think, well, you are the best barometer of how we're doing, and that it's really hard. That we're really a bifurcated economy. Industrial, I mean, I was working with some of the steel companies. They're doing terribly. Yeah. But the consumer, you seem to be more levered to job growth, which is really solid.
Yeah, listen, I think when consumers have got money in their pocket, again, they want to travel, and Expedia is at the center of travel.
Yeah. Now, hotels, when you do Hotels.com, you have a winning loyalty program. What does that mean? Because I think that everyone tells me that yours is the best and I should be a member.
It's incredible. Why is it incredible? It's simple. Stay 10 nights, get one free. There's no points to worry about. It's not really confusing. You stay 10 nights, you get one free. And importantly, you can stay anywhere. You don't have to pick one certain hotel chain over another. Any of our properties on Hotels.com, you can stay at using your points.
And you just did two really important deals. One with one of the biggest airlines, United, and the other with Marriott. Yeah. What will those mean for your bottom line?
Well, listen, I think they're both very positive deals. United deal, this is something that for us is, we think, going to make us economically better off. I think it's a great deal for them. And same with Marriott. I mean, we've been pretty clear over the course of the last couple of years that we have got our prices in the right spot. We're not in the business of reducing our margins. And the Marriott deal for us, we got very creative on the ways that we do business together. But net, it's basically a piece of business that's going to be accretive to our business.
And one last thing, I've been thinking that of the companies that do have some degree of pricing power because of demand and travel. You guys are been able to, in places, raise price if you have to.
Yeah. Well, what we've done is we've taken a pretty thoughtful approach to it, which is we've got low basic pricing.
Right.
We can then allow you to upsell into things like having your inventory available in our packages product. If you need more demand, even at that low basic pricing, you can pay more on advertising products or just give us more margin and rise up in the search results. And that's been something that's been pretty darn successful.
It's obvious that advertising on these big search companies really does make money for you.
Well, absolutely. Advertising is a big piece of it. It has been one of our largest growing revenue sources. Right. And importantly, if you want to target travelers, where do you go?
No, I know.
Where the travelers are, Expedia.
Well, it's fine. When they do the antitrust, they're going to have to go up the hill and say, listen, the customers have no choice. They have to advertise with us. It's where they are.
Well, it's a very competitive industry, as always, but we do have a lot of travelers who are shopping around on Expedia.
Careful, you may have to testify, talk about how good they're doing. That is Mark Okerstrom, the CEO of Expedia Group. You know, we've liked this one literally since it came public. And we also liked Home Away, now Verbo.
You got it.
Okay, Mad Money's back into the break.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.